Everybody keeps asking me the same question. Is the housing market about to crash, particularly when the Fed meets in a couple weeks? My answer is no. In fact, the data tells us a very different story. Across the Orlando area, home prices are still higher than they were a year ago, sitting at just over $410,000. Inventory has increased a little bit to about 4.5 months supply, and that's giving buyers more choices, but we're still below the 6 months level that's considered a truly balanced market. Now, when I look county by county, Seminole County continues to be one of the strongest markets in Central Florida. Orange County is seeing more competition among sellers, which means pricing strategy matters more than ever in Orange County. Lake County is doing pretty good. It remains attractive for buyers looking for affordability, while Volusia County continues benefiting from population growth and migration from higher end or higher cost markets. Now, let's talk about foreclosures, because a lot of people are asking a lot about them. In April, foreclosures and short sales represented just about 19 transactions across our region, accounting for only 1% of all sales. Now, that's nowhere near the levels we saw during the last housing crash, and that tells me we're dealing with isolated financial distress, not a widespread housing problem. As for the Fed, my prediction is they're going to hold rates steady. Inflation remains stubbornly high, and while Kevin Warsh may eventually want to move rates lower, I don't think that he's going to get the opportunity at this meeting. As you guys probably know, Jerome Powell's remaining on the Federal Reserve Board, and by the way, he even recently spoke about the importance of maintaining Fed independence from political influence. To me, that's a signal the Fed's going to stay focused on inflation first and rate cuts second. So, what's my takeaway on all this? This isn't a crashing market. It is stabilizing and normalizing. Buyers finally have some negotiating power. Sellers can still achieve strong prices if they're realistic. That's the key ticket here. Now, luxury remains surprisingly strong, and foreclosure activity is still low overall. So that's it. That's my hot take. That's my 60-second market update for you guys. If you want to see my luxury market report, check that out further down in this email if you happen to be watching this in email fashion. And listen, if you have any questions about your situation, never hesitate to give me a call. Thanks so much for watching.